Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, we did get the second day, the follow-through day or confirmation day on the bounce to the upside, at least until the comment was released near the close that Bernie Sanders was threatening to hold up the stimulus bill. That took the futures down a bit, but let's take a look at the charts and see where we go from here. Before we look at the charts, we've had a lot of great comments on our recent videos. And by the way, thanks again for watching. And when you're watching, please don't forget to hit the like button, or better yet, hit the subscribe button. But we obviously have a lot of astute viewers watching the videos. There's been a number of comments regarding the recent Federal Reserve action where they are just throwing the kitchen sink at the liquidity regarding this problem. And now we have this massive Federal Reserve stimulus bill. And I did want to mention, I talked about the Bernie Sanders thing. The market was rallying, and then near the close, it came out that there was a comment that Bernie Sanders said he might hold up the stimulus bill. And a lot of people blame that for the sell-off towards the close. But at the time of this recording, the Senate has passed it. It goes to the House, and the vote is expected to be on Friday. But with the news of the Senate passing the stimulus bill, the futures are still down a little bit, not a whole lot, but down a little bit. But there was no big bump when the Senate passed it. So whether or not that was really attributed to Bernie Sanders or just people taking profits on the big two-day rally, that remains to be seen. But back to the issue that I wanted to talk about is the fact that, yeah, it's a very valid point of, are we going to pay for this down the road, all this additional liquidity and stimulus that's being put into the economy to overcome? And this is a big problem, obviously, with the virus and shutting the economy down. But as you can see here, we've been basically living on credit cards since 2013. The chart that you're seeing here is debt to GDP. So it's the U.S. debt to GDP. So when the number's above 100, that basically means we're living on credit cards. We're spending more than we're bringing in, more than our GDP, which is the amount of money that we can make, the gross domestic product. So when you see that, that's not a very positive sign. And when you're looking at 106.9, and that doesn't include 2020, what do you think that bar on 2020 is going to look like when they start to calculate in everything that's being done right now to offset the virus? So it's going to be pretty scary. And another chart that I'm not sure if you've seen recently, but it should probably get your attention is, here's the U.S. debt clock. That's $23 trillion up there in the upper left-hand corner, the national debt. $23 trillion. How long do you think it's going to take us to pay that down? Even if we start to come up with some sort of a balanced budget, could take quite a while. Reminds me of a famous scene from one of my favorite movies of all time here, which is The Mask. And it's just like... Yep. I think either one of those scenarios accurately describes what you should think when you see this U.S. national debt clock ticking away like that of over $23 trillion, and now we're just going to accelerate that even faster. In all seriousness, let's get to the charts. And we take a look and we can see that we did have a pretty good move to the upside today. And we had a break above the 10-day moving average. We closed out an alert for our alert subscribers today on a bull call spread, a bullish call debit spread that we had looking for this bounce. And we had put it on back here on the 18th. You can actually watch the trade review video if you'd like to get more of the particulars, but we actually happened to hit the market right at the top today before this sell-off towards the close, even though that we didn't quite hit target back to the 100% retracement level. But I'm going to give you a different level to show there. We had Jeffrey Gundlach came out, who's a noted bond fund manager, and he said that he saw 270 out of the SPY on this bounce. And gee, let's see where he possibly could have come up with that level. So if you take a fib retracement level, we talked about this in the Trade Finder webinar last night, but if you take a fib retracement from where we went with the extension on the C wave to the downside in the zigzag, look where we are. Right there, 270 is the 38.2% fib level. So that'll be the first Fibonacci point of resistance on the move back to the upside. So if you're looking at that, you might say, well, why'd you close out your bullish trade already if you have a higher target than that? Good question. And the answer to the question is we had two massive days. We gapped up yesterday. We had another massive move to the upside today. Are we going to have another couple days straight to the upside? Maybe, but the VIX hadn't gone down much. So we were holding volatility based on the speed of the move to the upside, which is rare. Usually the VIX spikes up when you have downside moves. So taking the extra volatility into account, they gave us the opportunity to take a pretty quick gain. And if we calm down a bit, even if we rise to that level, we can go back and see what the price of the calls and even a call spread would be when we move back higher. But taking advantage of the volatility, and if you know anything about options, how important volatility is, and you see that factored into the pricing of the options. So my point is that the market could actually move higher, volatility drop, and the calls be worth less than what we got today. That happens all the time. Volatility is very important. Understanding the Greeks, understanding how options work, all that stuff is very important. So I just want to get back to you and show you what happened today, where we could possibly go from here. But don't forget, we still have that caveat out here, that thorn in our side, if you will, for any more of a sustained upward move, is the fact that we have this gap right here that at some point in time will have to get filled. When will it get filled? We'll be back to talk to you in the next few days and see where we go from here. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.